Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Tiffany's gets its unsolicited takeout offer from Louis Vuitton, so we'll talk about that. Bitcoin has its biggest move in 6 months. Earnings from AT&T, Spotify, Walgreens, a couple others, Google after the bell as well. And our guest today, Tim Seymour. You know him from CNBC's Fast Money. He's also the CIO of Seymour Asset Management. He would join the show at 8:35. Joel, what is the word here overnight? And you had a good weekend with Michigan football.
Oh, yeah.
You're
Great
happy.
weekend. Yep. We beat Notre Dame. So let's get on. But I don't want to talk about Ohio State. S&P futures are trading up 8 1/4 handles here at 3028.50. We have taken out the high from Friday. One number only, the all-time high basis to December contract. 30.31 1/4. I'm sure we'll have no problem testing that today. 3 handles away. Crude in the red by 17 cents at 56.49. Gold back above 1,500, staying there up $1.60 at 1506.90. Silver clinging to that $18 level, up 13.4 cents at 18.06. And good thing we keep talking about Bitcoin, up $780 at 9,495. Spencer, what's the news on Bitcoin?
Friday night, it was reported that Chinese President Xi Jinping said that China should speed up their research into the blockchain. According to Baidu, search results for blockchain were up more than 40 times the average in over the weekend. So thank you very much, Xi Jinping, for that comment.
So
Riot shareholders are rejoicing here this morning. Our IoT trading up a cool 8.9% on this news.
Are there any blockchain stocks left?
You didn't want to ask where it was.
Yeah, it's under. What is it? $1?
Yeah, it's up 15 cents, $1.83. But if you bought it on Friday, $1.68, you're up 9%. If you bought it any time before that, you're probably down though. So
to answer Joel's point, Overstock is still, I guess, technically a blockchain.
Okay.
yeah, it's trading. It's up 5%, 5.3%. But again, there's so many other broken stories here. I mean, the one thing about Overstock though is it stopped going down. You got out. So if you wanted to, just setting up trades for you guys, $9.85 would be my stop out. I mean, you're paying up $2 quite a bit to risk your 20% on something, but I mean, at least to stop going down. That was an ugly slide though, from September the 13th to the end of September. In like 2 weeks, it went from $29.75 to $9. That was ugly.
That was
one of the founders sold all his position. There was a whole bunch of stuff obviously going on there, but a lot of other issues. But it gets a little lift tonight with Bitcoin being up.
Is that the same founder that was like having the affair with the Russian spy? Okay. I just want to get my facts.
I don't know. I don't know any of those stories. All I know is the stock is in the gutter. But you know what? It's shown it does stop going down at least. So you know what? Even if you're stopping out, stop out at maybe Friday's low at 10.52. But hard to pay out. You're paying up over 10% now, 11.89. I hate chasing stocks. Could they squeeze them a little bit? There's probably some short interest there. Sure, they could. So,
what about Bitcoin? I think your $20,000 target by year end is not looking too good.
Did I say that?
Well, you said 20,000 for.
I said 20,000. I don't know if it's said by year end.
Okay. All right.
I did say I think it's going to 20,000 eventually. I don't think the story's broken on Bitcoin. I think it's still got. I think the story has cooled off, but I don't think it's completely broken. All the other cryptos it's broken on. I wouldn't buy any other crypto stuff, but Bitcoin is still. I don't know why. I'm not like I don't own any. I've never owned any, and I've dogged it for a long time. But it's still like the story's going to get hot eventually again. And that's why I just cannot bring myself to say that Bitcoin's, going back under 1,000. I don't know long term if I'm a believer in Bitcoin, but I'm not as a pessimistic, as I was maybe 2 years ago, saying, Bitcoin's, not going to go up at all. And obviously it has. So I don't know. I'm torn on it. I'm not a crypto trader though, so take that with a grain of salt.
How about the
I've never made a crypto trade in my life.
Thanksgiving dinner? You know, the old I'm long Bitcoin and Thanksgiving dinner.
Maybe.
That was at 17, right?
Maybe, yeah, maybe they could get another boost
I
like that.
think-
This gives it life. The question is, does it get sold at the big 10,000 level?
Yep.
Show me a chart. I don't know. How do you get charts on this? I don't even know where you get a chart from.
Well,
Bitcoin.
you could go to Coinbase or you could go GBTC.
Because really, there's no fundamentals, so you just got to look at it technically. I mean, there's news, and obviously this news over the weekend here with the blockchain stuff is what's propelling it here. But really, you can't analyze anything fundamentally really about this. So you look at the technical. Let's look at the technicals. I'll look at a technical and do it. I haven't looked at Bitcoin in months. So what's the technicals look like?
Go to GBTC
or go to the futures.
Or he doesn't pay for futures.
Oh, that's right.
I know this.
No, because they charge me $700 a month because I'm a pro. It's ridiculous. I'm looking here. What are you showing me? You're showing me the Bitcoin chart here right now.
Yep.
It's an ugly downtrend. I'll tell you that much. I don't know about 20,000. That looks like sell the pop to me. I don't know. What are your thoughts? That looks like a sell the pop to me.
Yeah, 10,050. We're at
The trend is down. Ugly.
Let's close above 10,000.
Yeah, that's the big number. We need to get above. Joel's right. You need to give it above 10,000 here in a hurry. Hold it up there, and then maybe you can start thinking about that. 13, 14,000 area again. You can't get up over 10,000. Katie brought the door. We'll be right back down those lows. So you need it next few days. You need this thing to get up above 10,000. I agree, Joel. I concur.
Oh, look at PCG under $4, down $1.06 at 394.
Real fast. What do we say? Page 5 on our trading book. The first 4 pages were first page support, second page resistance, third page was trends, and the purple crayon Jeff Mackey page, which we'll credit him for, and the fourth page with the purple crayon part, that is. And the fourth page was 50% retracement. The fifth page, we said, don't buy bankrupt companies. That's all the words on the page. Don't buy bankrupt companies. And this is another example. You're buying this at 5, thinking, oh, it's going to bounce. Where can it go? Where it can go? It can go to 0. And you know what else? If you buy at 25 or you buy at 5 and it goes to 0, the guy that bought at 5 loses as much as the guy that bought at 25. They lose their entire investment. Just depends on the dollars you put in it. So don't think, just because it's $5, it's where can it go? They can go to 0. This is a very strong case to go to 0. It's bankrupt. And we've already seen multiple reports that there may not be anything, even if they have to clean it out, there may not be anything left for shareholders. So I can't bring myself to buy this at all. I mean, I think you sell any pops or any strength that you get. I'm not sure you're going to get any strength.
Lombardo 141 says your book is getting bigger and bigger. It started at 2 pages.
I know it's 5 now, so we're there. When we get to 100 pages, we can write it. Somebody else is going to end up writing it on us, though, because we keep talking about it on the show. It's going to be very simple, like the first page is going to say support. And we're going to draw a little line, with the stock, it's got multiple lows in the same area. And we'll take our Jeff Mackey purple crayon there. So it's going to have about 10 words on the first page. It's going to be not a lot of words in this book. Just pictures, like a picture book, like for, like 5-year-olds.
We'll do a kid's book too.
Yeah, a kid's book on trading. It'll be good. But honestly, that's how I try to keep. All my strategies are very simple. Stock is upgrade, probably going up. How much is it going up? Well, it depends on the broker. But it's simple. Keep it simple.
All right. Do we want to go over this PCG? I mean, let's just continue.
More fires, eh, Spence?
More fires. There could be another planned blackout. As many as 2 million people could lose their power. So, more fires, more blackouts.
Man. PCG took out that former low of a move down $1.04. Yeah. I think it just, the institutions that were holding on to $5 they're just not holding on anymore. Someone's looking for a short squeeze off the open here. I don't know how many people are going to be willing to cover this if they think it's going to 0. So I don't know.
I don't think you have a lot of shorts scared right now.
Yeah.
I don't see anything squeezing anytime soon. EIX2 is obviously getting hit on this. Really got hit hard on Friday. If you're in EIX, danger Will Robinson type trade here. It's obviously, we can just go back. We have precedent here because we saw this back in September of I'm going into November of just 2018. So about a year ago when we obviously had the fires continuing. EIX went from $67 all the way down to 44. So if you think the party is over in EIX going downside, it depends how bad these fires get. I mean, Obviously, that's going to be the big dependent here, but there can be some liability there too. So they're obviously hitting EIX as well. So caution in both of those stocks.
Okay. All right, Spencer, keep us rolling here with
Let's
the news.
let's go to Tiffany. We somehow.
And I said, what about breakfast at
Oh, man,
Tiffany's?
I just got that song out of my head. Don't put it back in. Tiffany receives an unsolicited takeover bid from Louis Vuitton. Ticker on Louis Vuitton. They trade OTC if you care. Is LVMUY.
2 big letters.
The offer values Tiffany at around $120 per share. Total value $14.5 billion. The company has indicated that they will reject said takeover offer.
So of course it's trading at 130 when they get 120 takeover price. This market is just absolutely insane. It was already running up on Friday. These rumors, there was rumors kicking around this on Friday, was there not?
Really?
Was there, Spencer?
They were, yeah, there were rumors on Friday.
There was rumors flying around. I heard something on Friday about this. And obviously those people who bought Friday are getting significantly rewarded here this morning as we get confirmation that there was a bid put in place at 120. I'm going to trade 130. You're buying it now. Now you're buying everyone else's profits here. So I can't bring myself to say, I'm going to come in here and buy this at $130, hoping for a better offer or a better bid. This thing was $90 3 days ago. So if I was in this, I'd ring the register all day long, up 32%.
Right. And what happens if they flat out reject it?
Well, they did. They are.
What does it do? Go back down to
No, because everybody thinks now it's worth more. So the way these things work, when you get the bid, then they reject it. They're like, oh, they're going to pony up. They're going to give us more. So
that's a lot more.
I think I think I would ring the register. I think it's a gift. Obviously, the people who bought on Friday, buy on rumor, sell on news, would be selling this news. But I mean, news is getting bought significantly. You know what's interesting though here? So Deutsche Bank upgrades the stock this morning. They take it to a buy. And they raise their price target from 100 to 130. Okay, Deutsche Bank, it's at 130. Do I sell now? Is that what I'm supposed to do? You upgraded it this morning. It's been trading $130 all morning. So you're telling me, like, obviously I can't buy it at $98.55. So what do I do now? Am I supposed to sell it? If the analyst is out there, let me know, please. Because you set $130 price target on your upgrade this morning. Well, it's $130.50. We knew this news already. Like in the note, they're talking about the solicited offer. Or the unsolicited offer, or whatever it was from Louis Vuitton. So I don't know. Tell me, Deutsche Bank, what am I supposed to do here? The 130.77, and maybe you got lower. Maybe you got to downgrade it now to sell because you hit your price target. Confusing, Joel.
I would just keep an eye on the pre-market high. We're continuing to go higher. You just hit 131 even, I believe. I just saw a print there. So, if you had a large piece, I mean, oh, no, wait, went to 132.44.
Holy mackerel.
If you're an institution or a large shareholder in this and you're just sitting on hands waiting for $150 takeout, then go right ahead. I'm sure this is exceeding everyone's target.
I would sell this all day long if I owned it. I mean, yeah, maybe it goes to 133, maybe it goes to 135, maybe even goes to 140, who knows? But risk reward, I don't believe is to buy it here now. I believe it is to sell it. The thing was $90. The company, really when you look at the stock, it had been in a serious downtrend for a while here. Now you get all the way back up. We were $140 back in July of 2018. We had a terrible 2018. We really didn't have a great 2019 going. Yes, we were up from the lows, but not nearly as much as what some of the other stocks have been up. Stock was still in a downtrend. Now you get this gift. I think you sell it. Just my opinion.
Is it giving anyone else a boost here? I mean, is this going to kickstart the retail sector, which is, we're coming into Thanksgiving.
Signet's up. So you think like, well, let's go to the jewelry stores. I mean, Tiffany's does a lot of other things, but it's thought of as a jewelry store. So I'm not surprised Signet SIG is trading up 5% here. Signet's come off the low. Still got that 8% dividend there too. That's Jared, it's their big company, but they have a lot of other businesses as well. So it's trading up, Joel, just to answer your direct question here. I'm sure if there's some other smaller listed jewelry stores, I don't usually get too far outside the S&P 500 in my trading, but I'm sure, if there's any, type of jewelry stores here, they're probably going to trade up on this.
So you're not thinking that this will go into like your JW Nordstroms or too much?
Let's look at the chart. That's a good question. Could we show some life? I mean, Nordstrom's been showing life already here.
Yeah, they have.
Yeah, they have. And Kohl's has too, just quietly. The only one that doesn't show life is Macy's. Macy's never shows any life at all. Could this kickstart some of those? I mean, I don't know. I think we're reaching here a little bit, but because retail stock gets a bid, does it mean other big stocks bid? Nobody's buying Macy's. Nobody's probably buying Kohl's or Nordstrom. Were they buying any of these smaller ones? I don't know. And then we got some downgrades even in the sector today. So I don't know. I can't bring myself to, go start buying all these retail stocks just because Tiffany's is up.
Okay. All right. So just keep an eye on that pre-market high in Tiffany's and use that as a target. And obviously wait for more news coming out on this. If they want to pay 120, are they going to bump it to 140? I mean, that's pure conjecture and speculation.
Other big news, which happened on Friday night, was this contract with Microsoft and Amazon. And Amazon was expected to win it, but Microsoft ended up getting it. Tell us the details here, Mr. Israel. Yeah. I was actually at the hockey game Friday night, so I did not trade Friday night.
This has been, I don't know, I think I had 2 years or more maybe in the making. This potentially $10 billion cloud computing contract with the Pentagon. Oracle was in it. They were out in a previous round. IBM, they were out in a previous round. It came down to Amazon and Microsoft. Amazon was the favorite. Microsoft is the winner.
Microsoft wins.
$10 billion contract.
Mr. Softy is going to make new all-time highs on this, I think. So let's just go look. Well, it already is. The old all-time high is 142.37. We talked about this on Friday. Just setting up. I saw, or maybe it wasn't even Friday. It was last week. Somebody was asking me. I was like, it's in consolidation station, and I think eventually it's making new all-time highs. Okay, well, we're 3 or 4 days later. We're making new all-time highs. So I guess we got that one right. Wish I was long. I'm not long. It was a gift on the earnings when it traded down like the 133, 134 area after hours because they bought that right back up. Now you get this. Now it's in full breakout mode. I'm not fading this. This has been wanting to break out for a long time. I would buy pullbacks on Microsoft. I might even buy pullbacks. Get back down to 141, 142, where the area of the old where the old high was. Maybe that's where you strike. But Microsoft has been gearing up, and this is pushing it through resistance. This is a classic breakout here.
Well, the good news for Microsoft shareholders is it's up 377 and 144.5. The bad news is it ticked 146.50 this morning.
Little excited.
Yeah. So man, when you back off like that, I wouldn't say the high of the day is for sure in, but I would say if you did rally back into the 146 handle, you got near 146.5 because not much stock traded up there. I wonder if those were the first ticks. No, they bid it right off that 4 a.m. open. Then they took it to 146.50.
Yeah. The 4 a.m. open. We should stop and talk about that for a bit. I used to always get up and trade at 4 a.m. There was some opportunities, and there is some opportunities. You got to watch, though, because the liquidity is ridiculously low, even on a stock like Microsoft. It might not even have any bids and offers at 4 a.m. So it opens on ARCA, NASDAQ, 4 a.m. Sometimes there's just no offers at all. So you can have one person that's like, oh, I think this is really good news. They buy it like 150. Well, then real liquidity providers come in and say, no way, it's not worth that. And they start selling it. So it's very difficult. You never want to be aggressive in 4 a.m. It's almost better sometimes on the fades, but it's tricky. Like I used to trade 4 a.m. a lot. And, news is, sometimes not that fully disseminated. It's out there, but it's not fully out there yet. A lot of your news providers aren't even giving out news yet. So you got to really watch because a lot of informed traders out there. So you think, oh, here's a stock trading up $10. It's too high. I'm going to sell it. Well, that person maybe had the information. Wasn't, it's out there, but it's 4 a.m. So it's not widely out there. Maybe you didn't find it, the information. You could be wrong. So a lot of informed traders, a lot of booby traps, you could almost call it at 4 a.m. Danger Will Robinson trading those hours. I used to trade it a bit. I used to be okay with it. But again, there's just some times where you're like really get smacked around. Now I got the 2-year-old and the 5-year-old. It's hard for me to get up at 4 a.m. to trade. So I rarely trade the 4 a.m. open anymore.
Would you say it's more of a fade?
And it depends, Joel. I mean, you could come in sometimes and, maybe something's upgrading. You're like, oh, it's hot off the press. Or I saw this upgrade and maybe you're going to get a chance to buy it cheap. Maybe this is somebody sitting out there still that just wants out. I mean, those are, sometimes some opportunities. Sometimes there's some stocks that go ex-dividend, like on a special dividend or something, and people are sitting, too high on their bids overnight. And, sometimes these bids are still in the book at that time. But, I mean, it's so tricky to take advantage of any of that stuff because 90% of the orders that you're seeing out there are going to be like high-frequency informed orders. So what I mean by that is they have all the information. You're never going to usually beat a high frequency trader in an information game. It's difficult because they're obviously, a lot of money put into those programs. I mean, some algorithmic programs are obviously not, as informed as others, but it's tricky to beat anybody at 4 a.m. So a lot of danger.
I like the 6 p.m. open in the minis, just because there's lower risk trades there.
Right.
I did not get. I was bidding the close. They're laughing at me still. I can cancel that. We closed at 20 and a quarter. We must have had some sellers on the close. I don't know. We sold off the high, but I figured if I could get it flat on the session, it might be a good buy. Opened up 3023 even, ticked one tick lower, and boom, we've gone up to 29.50. So opens are important. I guess, that 4 a.m. open in stocks doesn't have quite the liquidity. But Triple D, what are you going to do when we go to 24/7 markets?
Maybe never sleep again.
Okay. All right, there's a couple stocks here. They're popping in the chat before we move on. I know we got some news stock. Let's talk about Tesla. And what an unbelievable day on Tesla. I know a few people here in the chat caught it. I was saying, well, if it can get over 300 and hold 300, it's looking pretty good. I had absolutely no idea that it would hold. It opened up.
I didn't think it was going to run like that in one day. Okay. We talked about it, and we said, I think it's a lot of people caught short. You can rewind the tape from Friday. And I said, I think the path of least resistance is higher. I did not know it was going to run another 30 points. So, that's, we were both on the right side of the trade. We didn't trade it, but I mean, we were both right when we were talking about it. It's squeezing the hell out of everyone right now. And there are so many people who are short this thing and caught short this thing, and they're in full panic mode now. So what does that mean? It means it could keep squeezing them again. I mean, eventually you're going to have a little bit of give back. The things went from 240 to 330, 90 points in 2 days. You're coming in now. You are definitely chasing. But don't be surprised. Squeezes can go on for longer than you think. So I would not be surprised if we even squeezed them a little bit more. If it takes out the high, 330, you could be at 340. I mean, today it could happen. But hard to come in and buy it now.
I don't know what happened in January. It must have been earnings. On January 17th, you had a close of 47.31. The next day you closed at 02.26. Is that, I can't remember. Could you look it up real quick and see what that
I can
was?
look.
There's probably earnings.
So many headlines in Tesla that I can't.
Where are you looking?
I cannot remember back to
what dates.
January 17th.
It could have been.
It had to be earnings.
It could have been deliveries.
Could have been deliveries too.
Could have been a tweet. Was that when Elon was smoking on TV?
With Joe Rogan?
See, it could have been that too. I
Okay.
cannot keep the Tesla headlines straight in my head.
All right. What I'm trying to say in a long-winded version is there's a gap in here. So if you think it's barreling through 330 today, I'd keep an eye on that 330. That was the high on Friday. And even if it goes like to 332 and then comes back down and pulls back, and let's see if it holds 330 on a closing basis. But basically what the chart is saying is your next target would be to fill the gap at 344.14.
Wow. And that could do it.
I'm not running out the
We came 90 points. I mean, yeah, so you're coming in for the last 15 because that's where you target. I think it could do it. I don't want to be short this thing. I never wanted to be short this thing. I wanted to be long it the whole time. I was long, I did write some puts. I made some money that way, but wish I'd have been flat out long the stock.
Weren't you long at 215?
Yeah. Oh, I wrote puts. No, I did. I had it long once. Not that low. I got out. I actually was long at like 280, and then I turned around. I went up to like 300, came back down to 280 or something, and I got out. I think I actually scratched the trade. And it went way lower, and so it was a good sell. I never rebought it. So I did it the other way. Remember, I said I don't think it's going bankrupt, and I wrote puts, the 120s out to 2 years out, and I got some nice premium for it. Well, stock ran up. The puts, started to come in, and I covered. I obviously shouldn't have because it'll be really worth a lot less now. But anyways, I never had a chance to rewrite. I know Jeremy played it that way too. It was a good way to play it, I think. There's a better way to stomach it. We'll say that because I could never stomach just owning the stock because of volatility so much. But when you're doing it, deep in the money puts like that, writing them, or deep out of the money puts, writing them. I mean, the moves, when it moves $10, those puts move like $1. You can stomach it a lot better. That's the only reason I was trading it that way because I couldn't stomach the stock.
January 30th, Joel, right?
No, 17th.
Oh, the 17th.
Yeah.
The 30th was earnings. The 17th
That must have been deliveries or something.
was, let's see what it was.
If it was a down,
Oh, it was they had a recall in China. They announced their layoffs, and yeah, I think it was layoff. It wasn't earnings. It was layoffs, and they had a recall in China on that day.
Okay.
All right.
So let's jump over here, and there's a lot of earnings reports we haven't covered here yet. Let's
Sure,
go to
let's do
AT&T. Let's do the 2 or 3 big earnings reports from this one. It's a huge earnings week. We're gonna get Google tonight. We're gonna get Beyond Meats tonight.
Yep.
Well,
And
that's an exciting one.
Beyond Meat also has their lockup expiration this week.
All kinds of fun stuff there. Let's go AT&T.
AT&T this morning, the Q3 adjusted EPS beat the estimate by a penny, 94 cents versus 93 cents. Sales missed by a smidge, 44.58 billion versus a $45 billion estimate, but essentially in line on the Q3 numbers there. They guided that their full year 2020 sales guidance will be between $3.60 and $3.70. That is in line. Also, don't forget tomorrow they have a streaming event, a Warner Media event tomorrow. They're gonna talk about HBO Max and their streaming stuff tomorrow.
They didn't get any love for that Joker movie, eh? We tried to give them some love, but they didn't get any love for that.
Well,
that's Time Warner.
Well, okay, but can I tell you part of the reason why that is?
Yeah.
Is they didn't think it was going to be a hit. I was reading about this. So apparently they didn't shoulder all the risk and therefore are not reaping all. So that is why. Well,
anyways, you think like a hit, like that movie's breaking records.
They gave away the majority of the
because when Disney gets one of those movies that breaks records, the stock usually responds, and it's like AT&T. This is Time Warner. This is one of their babies here.
Seen that?
It
Joel,
really.
Did you see it?
It has set records.
Have you seen it?
No, not yet.
I want to see it.
I haven't gotten around.
Laura won't go with me. We should go as a group here.
I'm not going.
You want to go, Spencer? I'll go with you because
yeah,
Laura won't go. She's too scared. She saw the trailer. She got creeped right out. That's my wife, Laura.
Haven't gotten around to
It's just going to be one of the things where you invite us and then you're going to try and make us pay for the tickets.
He's got to get out of this ticket. Okay, fine, Joel. I'll buy your ticket for the Tuesday hockey game.
Oh my God, Joel.
Look what he's done. He worked himself right out of that.
To a hockey game. Okay. He won Edmonton. He want to go to the hockey game.
Yeah. So
you got to buy everybody's ticket. Maybe that's the way it worked 30 years ago.
How it works. I offer you to go to 2 Michigan games. I asked you to go to one a while ago, and then I asked you on Saturday. Spencer,
I didn't go. I took you to a Notre Dame Michigan game. I didn't make you play.
Listen, Joel, you already have those.
You got them for free from that guy. That would have been illegal.
Joel likes everything for free.
I just think it's
fine, Joel. I will buy your ticket.
Hi.
I'm not going to break the bank. It's the Oilers and Wings. They're not expensive.
And dinner too. You're coming over.
And dinner. I got to buy you dinner now too. Look at the way this guy works.
Don't let him manipulate you.
You got to be buying me dinner. You owe me like 4 steak dinners, so I'm coming over and I'm collecting on one of my steak dinners. You're buying the steak dinner. You're taking Spencer too. There's like 4 steak dinners we're owed.
Boards too.
Where are we gonna go? Where's a good steakhouse downtown, Spencer?
Coney Island.
Coney Island. Now that Joel's fan, he's taking us for steak dinners at Coney Island.
All right, back to AT&T here.
we're all wound up now. $38. What's gonna happen there?
There you go, stealing my content.
Just like CNBC stealing their content.
There's you spiked up. Someone got real excited, took this to 38.35. And I can't really say 38 even, but I do see a pair of highs between 38.14 and 38.36. So if you sneak over 38, which doesn't look like we're going to do right now, just be aware you got the pair of highs. I'll call it 38.25. That would be a great target if they can continue this rally in AT&T. S&Ps just tick 30.30. What a nice number that is. Backed off $1.50, trading at 28.50.
All right. And then we got also reporting this morning, WBA.
Oh, okay. And Spotify.
Let's go Spotify. It's more fun.
Okay.
WBA is boring. And Spotify is up $10. Let's go to fun one.
Spotify, their numbers were in line, 40 cents a share. Actually, that was a big beat, although there must have been some adjustments because they were expected to lose 40 cents a share. Revenue $1.93 billion versus $1.92 billion. New subs 5 million. That is in line with the previously given guidance. So good report.
Big pop coming back. Trend's still not your friend here, but it is bucking the trend and starting to break that downtrend here. So it's interesting on pullbacks, not facing up $10. If it was to come in, maybe I'm interested, but I don't know. The problem is this company is ever going to make money? Really? Like how much do they lose? Let's talk, they beat, but how much did they lose this quarter?
Right. Well, on an adjusted basis, they made some money, but
all right, well, adjusted basis, but let's start seeing some cash coming. I need to start seeing some of these companies make money because
seen this one coming, for sure. About a month and a half ago, Neil added the pre-market prep show to Spotify.
Oh, that's the catalyst.
Yeah.
And a month ago it bottomed.
Did you see that?
We got to start following ourselves. Where else are we getting added to, Spencer?
I say it every day. We're pretty much wherever you can get your podcasts. Spotify, we're on Google.
Next time we add something like Spotify, we need to know that because that's the teller here.
There are no other public.
Thanks to Pre-Market Prep for helping out Spotify.
There are no other plays. There are no other plays for us. So.
My area of interest today.
Although it didn't work with Zoom. Zoom's at 63 now. We went to Zoom when it was like at $100.
No, I think we did it before the IPO, weren't we?
Oh, maybe we did.
Yeah.
Were we on Zoom before the IPO?
I can't remember.
This is a bad.
Yes, we were. Yes, we were.
133, 133.20. If you're really looking for a good target here and you don't want to sell in the pre-market action here, I would see back if you pull up your daily chart, you guys can see what I'm looking at. On the 10th, 11th, and 12th of September, you had all your highs in the 133 handle from 133.18 to 133.57. So if you're really holding out on this one today, I think you can see 133.25. That's at over $2 from where it's trading. I have no idea when it goes into reverse. I have absolutely no idea where support is. Dennis, give us support on that one.
Robhood, I don't know where support is on this one. What stock are you on now?
Well, you go Robhood and then you go
Spotify.
Spotify.
Yeah, well, I already said I'm done with Spotify. I moved on.
Okay.
I don't know where there is any support on this.
Because he's distracted because we're debating in the chat that the merits.
Yeah, because you know what? this is going to come at you, Spencer. It was actually your original idea to go to the Oilers game.
Okay, fine.
It
was my idea, but I didn't.
It was Spencer's idea, so Spencer's got to buy us tickets.
Oh, now Dennis. Oh, no wonder Spencer's like, well, I don't like the pay.
Yeah, now the truth comes. If you actually bring this all the way back, it was like he knows I'm an Oilers fan. He's like, let's go to the Oilers game. I was like, sure, I'll buy tickets, I said.
Didn't already have them. It was an idea to go.
It was Spencer's original idea. So this is going to be great. Spencer's going to buy the hockey tickets. Joel's going to buy a steak dinner.
Oh, yeah.
I'm going to go for everything for free.
That's great. Just fantastic.
I could tell, like, when I was saying we should make Dennis pay, Spencer, it was like, even before I mentioned it to you, he was like, nah.
No.
And see, Joel, this is why.
It's not at all what I said. I'm going to pay for my own because that's how it should be.
Yeah, because you started the whole thing.
Oh, my God. Okay.
$5 beers there, right behind section 102. This is crazy. So listen to this. I was at the game on Friday, and I'm like looking at the sign, and there's 24-ounce beers for $13 or 12-ounce beers for $5. I've never seen that in my life. I was like, well, I'll take the $5 beer. I'm like, this is arbitrage. I'm like, have you ever seen that you get actually a discount for buying a smaller beer? $5 beer for 12 ounce or $5. The large beer, the 24-ounce, is $13. What? What's going on with that? That's behind section 101 at Little Caesars.
Well, let's not do
it's completely mispriced. We can arb that, Joel.
Let's not do what we did at the Notre Dame game a few years ago.
Well, that's BYOB. Don't do that into college.
Yeah, we got in trouble.
That was Joel.
We paid them back though for trying to kick us out of.
They did try to kick us out, but they let us go. They just made us dump. They made you dump your little Mickey.
Yeah.
Don't tell stuff like that.
8:34 here. Let's take a quick break and grab our guest today, Tim Seymour from CNBC, also of Seymour Asset Management. So we'll be right back in a moment here with Tim.
Hello. Hey, Spencer. Good, man. Okay. Sounds great, guys. Looking forward to it. Yeah.
All right, welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick, joined now by Tim Seymour from Fast Money. Tim, how's it going?
Hey guys, how are you? Good morning.
Tim, you were just at the Benzinga Cannabis Capital Conference in Chicago last week. Enlighten us. What did you? We weren't invited, so what'd you learn?
Well, guys, it was a standing room only event, so we've got to get quality folks in there, and need to keep a little face control at the door as well.
That's fair.
Just kidding. Look, in the middle of what's undoubtedly a bear market in cannabis, it was pretty impressive to see what remains the enthusiasm for the base investment case, and frankly, just a lot more rationalization in the sector. Very much the same real players. In fact, I would argue it's a more comprehensive kind of group of folks that were gathered there from broader sector, broader industry interests, et cetera. So, fantastic event combining really the best companies in the industry and investors and folks that have been at this for a long time. I mean, this for those of us been investing in cannabis, this isn't a 6 or a 12 or an 18-month trade. This is something that's been going on for a long time, and something that I think the commitment to investing in the sector remains just that. There's going to be some difficult periods. Capital markets have been brutal, and I think there's a lot of different reasons for that, which include just the structure of the legality that's allowed really only Canada to be the place where money can be raised in traditional capital markets, and that's had huge issues. So great event. Congrats to your colleagues, because it was really an important event to be at.
Is there a specific area of the industry, though? Is it that you sense the most excitement over?
I think one of the things that has me the most excited is that this is becoming a very sophisticated consumer products story, or if you want to look at it in kind of classic industry CPG terminology or FMCG terminology, or for the consumer analysts out there. I mean, this is going to be no different than assessing branding, distribution, logistics, ERP, software. It's going to be very much a consumer story. Yes, there's an adult market, there's a medical market, there's a wellness market, there's a lifestyle market. So there's different ways that will shake out. But anyone who's focused on investing in cannabis should be focused on how to get exposure to some of the parts of this retail element of it all that I think define investing in other sectors in the same way. And so the early stage was very much about cultivation and infrastructure and whatnot, and maybe as much of an asset trade, funded production, funded capacity, that kind of thing, or not funded for that matter. But I think that's where I would be focused if I were investing today. And I have an ETF, by the way, for those folks that are.
There we go. We're on the line with Tim Seymour. You guys all know him from CNBC's Fast Money, as CIO of Seymour Asset Management. And you took the words right out of my mouth here. We talk a lot about the markets, right? And Dennis, with his 400 stocks in his portfolio, gets dinged and has good stuff and bad stuff. I've been a lot, ETFs, the Vanguard high dividend yield ETFs. Are you trying to pick individual stocks? I guess you already answered this for me. Are you trying to pick individual stocks in this sector, or do you just kind of like the blanket coverage with the ETFs?
Sorry, we're still talking cannabis, or are we talking broader?
Cannabis.
Yeah. So look, I think for investors, investing thematically is important, especially when it's difficult to do a lot of the work that we're doing on a daily basis. So I think investing in the ETF world is an effective way to get that exposure. It's not the end all be all, and you're going to rise and fall with the tide of what the overall investment thematic performance is of that sector. And it's been a challenging I don't know, 3 months, you could call it, maybe since April when valuations peaked. I would argue that I think in the public and the private markets, putting new dollars to work here will be, I think, very effective and very tactical in the big picture. I run an ETF that is 33, 34 stocks that is attempting to try to give investors a chance to invest tactically, but more importantly, thematically with companies that we think are the right ones to own today, and then hopefully we're pushing on the edge to be investing in the companies that are the right ones to be investing tomorrow. For someone that's run long-short equities and been involved in emerging markets and new asset classes and whatnot, what's different about this is that I'm not trying to catch every twist and turn in the market on a daily basis. The goal is to do work on companies, to roll up your sleeves, meet with the management teams, understand who's real, who's not, and I think that's how investors should be looking at the sector, because I think it's going to continue to evolve rapidly, and I think that's the way to invest, because investment concepts and focus of today are very different than the ones of 12 months ago, and I'm quite sure it will be different in another 12 months. So part of that is we are also somewhat constrained by what we can invest in. So to be clear, this is it's a 40 Act product. Which means we've got both generic listing standards and requirements that any ETF would have, governed by the SEC, which means that we too are challenged by some of the federal restrictions of investing in companies in the U.S. who may be legal in the underlying states they do business in, but on a federal level are not, and therefore we can't own that exposure. We can own pure play, either fully legal U.S. stories as they relate to CBD and hemp and distribution and medical, and then on a global basis, we can own the companies that operate in the federal jurisdiction that is their own, that is legal. So it's obviously mostly Canada, but we can invest in Israel, we can invest in Australia, which are other places that have the federal dynamic as part of it. So that's and I think that's going to change. I think the legislative environment in cannabis is changing dramatically, and I think my hope is, and I continue to be talking to folks and have access to folks in Washington, I think the legislative developments for the sector for the U.S. continue to be pretty exciting. And I think this is a pre-2020 election event for the U.S. Where I think you're going to have a lot more access to capital markets for these companies. Not forecasting full descheduling necessarily, but I do think that there's a lot of opportunity that's going to come in the capital markets before the elections.
And CNBS is actively managed. And is that what you've decided what's best because of the industry is so new, right? Is that the reason why it's active? It's so new?
Yeah, I think so. I mean, I think so. Our ticker is CNBS, which is how you abbreviate cannabis, and my goal is to actively be investing in a sector that is going to change, and so some of the early leaders will very possibly be the leaders tomorrow. Some of them will not be, and I think what we're seeing with both corporate governance and really balance sheet and kind of cash flow management, there's some companies that are doing a great job, and there's some companies that just are not doing a very good job. So being active means that you can make adjustments quickly if there are corporate governance dynamics that are unclear, uncomfortable. Don't pass kind of a rigorous analysis, or there's M&A on a daily, weekly, monthly basis that could change some of the kind of the key components of some of the biggest companies in the sector. So having to wait around to rebalance, or having to necessarily own a company because it's in an index, these are things that I just don't think make sense for the sector. So actively managed doesn't necessarily mean hey, we're in a better position to do X, Y, or Z. It means that by definition, we're in there every day, and we're assessing what to do with the companies, and we're meeting with management teams, and we're trying to best define the most investable landscape. But I think that's what's exciting about this industry, and I'm sure for investors who've been investing in cannabis, there's a lot of folks, look, like a lot of sectors, the most money was lost at the top. More money was lost than has been made in the sector. As you started to see the biggest, investor interest, it came when valuations were at their peaks and unsustainable. So I think investors rightly should be cautious, should be as conservative as they can be. I do think that the environment today has brought a lot of investment rationalization into the sector. I'm seeing it in valuations, and I'm also involved in a hedge fund. So I'm building a hedge fund with another guy named Jason Wild, who's also been in the sector for a long time, and we're running a cannabis dedicated fund, which is invested more in the private space, although we can invest it in the publics. And so the valuations that we're seeing in great companies, including some industry leaders now, especially brands that have already established themselves, especially in key markets like California or in Florida, that are trading for 1.5 to 2 times, or even less, trading at 1 times revenues, because the industry needs so much capital. If you have a fresh dollar to allocate for capital right now, it has a lot of reach, and it also means that we can extract better investment terms from the companies who are trying to raise capital, because frankly, there's not a lot of capital out there. So I think it's an exciting time to be investing. One of the experiences I have from investing in emerging markets, which are highly risky asset classes and less liquid, and developing legislatively, and don't necessarily have the same deep investor institutional pool behind them. They're very similar, right? And the couple things that always come to mind: it can always get cheaper, can always get worse, but that also the most money is made when things go from terrible to just bad, and I think we've probably got that dynamic going on right now. And bad obviously is not our outlook for the future. It just means our companies that are struggling to make money, that are falling under the weight of heavy CapEx, OpEx exposure, that are trying hard to grow in a growth industry without growth capital. So those have created some enormous opportunities.
Tim, Dennis Dick from Bright Trading. You just mentioned emerging markets, and that's where actually I wanted to bring the conversation to, because I always enjoy your commentary on fast money when you talk emerging markets. I look at the EEM and I see, the last 7-8 years, and obviously the U.S. markets have been in a pretty good bull run from then. If you look comparatively, the SPY from 2013 was around 130, now we're 300, so we've more than doubled. The EEM has gone nowhere. Do you think there's a potential for a catch-up trade here?
Yeah, it really depending on how you've invested in emerging markets, as you pointed out, you've been sideways with money, certainly over the last couple of years. But right, you could make an argument going back 10 years. You've done nothing. And what's even more frustrating is if you're a relative value investor, the EEM relative to the S&P has actually continued to make new lows, right? Because as we know, the S&P has been going higher. So even as recently as say August, you had a ratio you could track is very simply the EEM divided by the SPY, and on August, I don't know, third week of August, basically, it got to a 10-year low on a relative basis against the S&P. Now, since that point, it's actually outperformed by, let's see, I'm just got my chart in front of me. Yeah, it's outperformed by about 4% since August. So, in kind of a more accommodating environment for both the dollar, for I think the dynamics across Europe, and some sense of you guys have as good of a guess as I do on what's going on with trade discussions. But I think the keys for emerging markets remain. Look, if the dollar is put in a some type of a recent high, short to medium term, that's a fantastic environment for emerging, because I think EM currencies look on a relative basis to themselves very cheap to where they have been trading, and in emerging markets, half your return is very much currency based. Think of the components of the EEM, and you get right to the top of the balance sheet, which is dominated by Samsung, Alibaba, Taiwan Semi, Tencent. and I think there's no question that if you look at Taiwan Semi and you look at some of the kind of the tech components of EEM, it's actually been a pretty good run, right? And so if you're investing in emerging markets, you don't necessarily you haven't underperformed in certain parts of your allocation, and Taiwan Semi is at all-time highs. If you look at Samsung, it's actually started to have this breakout that's pretty impressive, and it's kind of been tracking Apple as once again even though Samsung is a more diversified and has a lot of semiconductor exposure as well. I think Samsung continues to trade well, and I think it will continue to trade well. And then when I look at Alibaba and Tencent, I think they're two of the most attractively priced mega cap tech companies in the world, with obviously plenty of headwinds around both where they sit in a global trade war dynamic, Big Brother in China, and some folks have been concerned about some of the dynamics for those two companies. But I love Tencent. I love it for the gaming exposure. I think it's arguably one of the most sophisticated kind of VC tech incubator companies in the world. And then they have their core social platforms in China and across Asia that are dominant. And Alibaba is also what it is, and Alibaba, like Amazon, has the different components of its business that I think people forget about sometimes, both in terms of their exposure to the cloud, but Alipay and financial, et cetera. So I mean, I think these are reasons to like emerging markets. I think buy and hold and the index as it's constituted remains challenging because there's a lot of other stuff in there that I think will trade heavy. But to finish on emerging markets, I really like India here. Continue to like Brazil here, and I think in an absence of global inflation, the places that have historically had a lot of structural inflation and have had central bank concerns around their need to be raising interest rates, et cetera. I think you've got this is the other side of the entire environment we're in. I think those types of economies benefit here.
All right, we've been on the line with Tim Seymour. You can see him on CNBC. It's Fast Money. He's also the CIO of Seymour Asset Management. As we mentioned, CNBS is his actively managed cannabis ETF. Tim, we'd love to get you on again before this earnings season wraps up.
Be great, guys. This is always a fantastic conversation. I wish they allowed me to talk this much on Fast Money.
You're fighting with that Dan Nathan guy all the time. Here.
Get rid of Dennis, bring in Tim Seymour, and I can.
I'm going to get fired off this show, Tim.
That's my pleasure, guys. Thanks a lot.
Have a good one.
All right.
8:52 here. Joel, what we missed?
Busting out, new all-time high, up 12 handles, 30, 32.5. Opening above at this point, the former all-time high, 30, 31.25. So man, I'm just like keep upping my bids here and just chasing, as you would say. But if it comes back down mid-range on the session, 30.28. Looks like a lower risk buy to me.
I mean, we've been bullish on this show for a while here now, and it just looks like this market wants to go higher, and here we are. We're challenging, and we look like we're going to try to make new all-time highs on the SPY. I mean, this is right now. Are we not touching in the pre-market?
Yep.
On the SPY. So, I mean, pullbacks are being bought. Money managers. There's everybody's expectations that a trade deal is getting done. That has been the number one worry for this market here. And obviously, that is starting to look like we might get something happening soon. At least the market is speculating that we might get something happening there soon. And that is the catalyst. But you know what? The earnings have been, even the earnings that haven't been good have been bought. I mean, Caterpillar had a disaster report. Look at that stock. I mean, the earnings were not good. It didn't matter. They turned around, they bought the dip. Not only did they buy the dip, they kept buying it. So you have stocks like Tesla that have good numbers and keep running. And then you have stocks that actually had some disappointing numbers like Caterpillar, and they got bought too. I mean, we've seen multiple examples of this as well, where stocks somehow have disappointed. I mean, even Microsoft last week was down on its initial numbers there. Maybe it was, algo's looking, at the non-adjusted number. But I mean, when you look here, Microsoft making new all-time highs too. It's very difficult to paint the bearish scenario here when you got everything breaking out. I never want to be short a stock when it's making a new all-time high. And I definitely don't want to be short the market when it's making a new all-time high.
All right, we just printed 32.75. Spencer, we didn't get to all of our
Walgreens.
Walgreens.
Walgreens Boots Alliance beat on their EPS by 2 cents, $1.43 versus $1.41. Sales also beat 33.95 versus $33.9 billion. So top line and bottom line beat for Walgreens.
Hard to fade this too, because you know what? You've been in consolidation station for a long time. It's a stock that was $85 a year ago. You're at 56 now. You could come back to 60, 65 and still be in a downtrend here. So you're coming in here and saying, yeah, the trend is not your friend. It's still down. It's still a retail stock. It's still maybe too many of these stores on every corner. But right now, this market is just making it difficult to short anything. So you know what? This could be a stock that could run a little bit. I mean, it could be one that just pulls back. Maybe the money just goes full growth and we start running into the Rokus and the Shopifys and all the fun stuff again there. But we've seen this trade to value here, very sustained in the last month. We've seen a lot of money rotate out of, some of those higher growth names into the value names. This is a value name. It's about 3.26% dividend. It's a company that makes decent money. Even if, you don't believe the growth is there, it's a value name that has been catching a bit too. So I don't want to be short this one either.
Above 56, things really open up here. Your pre-market high comes in at 56.50. You had a little high above 56, but look at the daily. There's not much here between 56 and 58. So holding 56, good for this one. Don't know if we have steam to get to 58 today, but that's looking like a pretty clear breakout over 56 WBA. And CVS, that's made a nice comeback.
It's come back a long ways too.
Yeah.
Had a lot of insider buys back in the mid 50s. We talked about those in the show. A lot of times when you see some significant insider buys, I'm not talking about like buying 10,000 shares. There was some significant buys in that CVS. I don't remember if it was July or August, but when we start seeing insiders pouring in significant money, a lot of times those insiders end up being right. And here it is. It's up 10 points from where those insider buys were. And obviously, if you held through that time, you did very well.
Let's see if I'm trying to find it here. Insider buys of the week. This was back in March 17th, on Benzinga, CVS Health. Directors, two different directors, 12,000 shares, 636,000, and they had bought another 12,000 the previous week, so over $1 million.
There was some other ones in there too. There's been some insider buys going in CVS. You can obviously get those from your SEC. If you go in your Benzinga Pro, make sure when you go to your sources, this is the best place to get it. So if you just go into your sources, I'll tell you how to do this right now. Check SEC box. That's where you're going to see your insider buys come in. And obviously, those can be very influential sometimes. So get this right in your Pro.
Yep. I would have two news feeds, one for the Benzinga Wire, one for SEC/press releases.
This is what I have. I have Benzinga Wire, I have press releases, and I have the SEC, and I have Benzinga Signals there too.
Right.
But I have all those checked.
But there are
my Benzinga Pro.
There can be so much noise between the PRs and the SEC that I have that as a separate news feed,
Yeah. Oh yeah. The SEC pops out headlines like crazy.
Right.
So, you're right. You should almost have a separate window going for that because you can get lost in it. Where we have a lot of individual company news where, your Benzinga, we have Charles is 4 to 5 o'clock just after the bell. There's a lot of that. And then it starts going. But those SEC filings just keep pouring in all night. All night. So, if you're checking that and reading every one, you're going to get a headache reading that many headlines. But, there is some summaries going on in there. And obviously, there's some, if we get some significant insider buys on stocks that are beaten up, those can be very influential. So just before we close, we only got 2 minutes left here. I'm going to give you a quick imbalance look because we haven't looked at those yet. I do see AT&T now trading up over $38. We said, what does it do at 38? Well, it went up to 38. What does it do? Does it hold? It's the kind of stock that, in this environment maybe is not going to get bought as much. So I almost think, I've been pretty bullish all stocks. I don't know if I'd be buying AT&T up here though. We do have some multiple highs here up here at 38. It is a stock that is more of a bond play, more of a dividend play. Remember, TLT is trading down here again. TLT has been out of favor here for the last little while as money has been pouring back into the stock. So we know, that's the main reason why the banks have been very strong too, is TLT has been weaker. So you start thinking about your utilities. I'm like fading those rallies. You start thinking, about some of your REITs. I'd be more of a fader of those rallies now. I think the easy money's been made in the utilities and the REITs. I think I'd actually be selling those because if we go into this full, breakout bull market, they're not going to be buying your Procter and Gamble's too. They're not going to be buying your utility stocks. They've had incredible runs. I mean, Southern has run from 55 to 62 in 2 months. A huge run for a stock that's got a big dividend as well. I think it's time to take profits in the utilities. I think it's time to take profits in the REITs. I think it's time, continue to be time, to put on a little bit more risk here if you don't have it on. If you're underweight risk and you think this big bear market's coming, I think you're wrong.
All right. On that note, that'll be it for our show. I want to thank our guest, Tim Seymour. Thanks to all of you in our chats, both of them, the one on YouTube and the one on premarket.benzinga.com. Catch our podcast. We're on Spotify, as we mentioned, iTunes, SoundCloud, Stitcher, most of your podcast platforms, or just rewatch our show on YouTube. Please remember, all the information from our show meant to be used as informational purposes only and not for investing or trading advice. And as we mentioned on Friday, if you want to be on this Friday's edition of whatever we call it, the hot potato segment, email us, premarket@benzinga.com. That's it for now. Everyone have a great rest of your day. We'll be back with you on Tuesday.